the 10-year Treasury, with our next guest, Lee Munson, Chief Investment Officer, Portfolio Wealth Advisors. So when investors hear about the cyclicals, you say, watch the 10-year. Walk us through why this is so very important.
Well, the 10-year is a proxy, and really what everybody's looking at, to let us know that we have a reflation trade. So you look at the beginning of the part of the year where the Treasury is going up, it's going up. You're seeing things like cyclical, or let's just call it broadly small cap value or large value, your energy industrials, materials, the banks, even to a certain extent, gold, emerging markets, that type of thing. So we knew going into April, and a lot of people like me, a lot of people smarter than me said, rates are going to sort of, bottom out, or they're just going to sort of pause for a second. And what it signals, right, when that 10-year Treasury stops going up and kind of flatlines, it'll give investors the sense that maybe we're not reflating right now, that maybe the accelerating growth and accelerating inflation has paused. And that's when you get what we've had this summer, which is the growth stuff, the long duration assets, the hot stocks have started to outperform some of the cheaper cyclicals. That is really what the longer term trend is. So I want to let people know that we want to rejoice when that 10-year yield starts going down. I want to look at anomalies in this bond market because that'll give you a short sort of counter trend where maybe the value stuff and the cyclical stuff starts to underperform a little, starts to get things cheap, and people start to question whether or not we're really going to reflate. But Nicole, I have to tell you, if you do a little bit more digging and you start looking a little bit more into those Treasury auctions, you're going to find that we're not issuing enough treasuries to pay for this large deficit. And so with the Fed buying everything, right, all the treasuries, it's crowding it out. And so when I just look at yields, I think that we're getting the false impression that yields are low, when really all that's happened is that short term, we just have this technical anomaly where Treasury isn't printing enough and the Fed is buying so much, and it's giving people this false sense that reflation isn't happening. Add that to the narrative of the Delta variant and concerns about more shutdowns, and you get a summer correction. I have the same problem as your last guest. I want to see the VIX higher before I buy. I want to see it. I want to see more like 2 days. And you saw May 12th, you saw June 18th. Those are great days, but I need 2 or 3 of those days to really get in. But I wouldn't give up on the cyclical trade. It's taking a pause, and the 10-year is the key. And so if you see the 10-year drop and those cyclicals sell off, that's what's happening.
Well, you used an example, right? You said the JETS ETF can tell you a story, for example. Tell me about that.
Yeah. So that's what happens when people get too enamored of trying to pick away like some particular part of the cyclicals, right? And so if you look at the JET ETF, which is these global airlines, right? It's a horrible business. And I get that people want to bottom fish and speculate, but I don't think that that's the type of cyclical that you want. And also it's done horrible over the last few months. It's making lower lows, and I do not like to see lower lows. Where if you look at sort of general, say, small cap value, it hit down on May 12th, which is when the VIX, we had a big sell-off. June 18, a few weeks ago, it made a higher low, and that's what I want to see. So I would caution people, if I was to give you some free advice, which is worth, nothing but a grain of salt, it's try to look more broadly at cyclicals versus trying to find some little piece of it, because I can tell you, being through multiple crashes in my career, every post-recession reflation trade is a little bit different. And sometimes retail comes back. You just have to do it wide.
Listen, and your advice is worth a lot, Lee Munson. Don't be funny here, saying grain of salt. We adore you. We're glad you're on the show. You always do some great stock picking for us and giving us some broad-based ideas here for a long-term portfolio, and watching the 10-year bond yield obviously is a really important part of that. So Lee Munson, thank you. Chief Investment Officer, Portfolio Wealth Advisors. Thank you.